What's up, y'all? We have FOMC tomorrow. You need to be prepared. There are 3 scenarios that's going to come up, and you need to be prepared for all 3 of them, right? So, scenario number 1, we're going to get right into the candles immediately. I want you to get this quick and easy, right? We're going to get into scenario number 1. So, we're going to start off with the weekly candle here, like usual, right? I like to break down time frame analysis, multi-frame analysis, however you want to call it. So, we're going to start off with a little channel here. I like the channels. We start at the tippy top. Remember, we always start at the top, then we work our way down, right? Now, this is the most significant area. I wouldn't say so. It only touched 1-2 times. If we move down here, we touched 4 times, and then the 5th time it broke out. So I'm going to call that the downtrend, right? So then we have this downtrend. Now let's zoom in. Now that we have zoomed in, we see that we had this move here, then a higher low, right? A higher swing low right here. And then we broke out, retest, and now we're seeing some buying, right? With heavy volume. So that's important. So what does that mean? That means that we're looking for continuation, and next week we can see the continuation above this price action. But tomorrow's FOMC, that could ruin everything for us. So now we have to dig a little deeper. We're gonna go into the daily chart, and we're going to recognize what's going on. So what do you see here? We see the moving averages were all in order, going up, and then we see this pause here, retest, and now we're seeing some bullish action on heavy volume. So that's what I want you to notice, is the heavy volume, right? Okay. So now look at the swing highs and swing lows. So we have this swing high and swing low here. Right, we have this. So it's important that you notice that these swings are getting higher, right? This one was here at 373, and this one was here at 379, 380. So if you notice that these are getting higher, and so is the top, then you could expect this to continue. So now we need to do 2 things. We need a candle to confirm the break of this 21 period moving average, right? Like if you go back in history, you can see that when the price breaks down, for example here, when the price breaks down, we're going bullish, right? It breaks down, and we get a close under the 21 period moving average. The next candle does not trade under, and we see a reversal to the upside. So now we don't want that to play out here. We see the first candle close above the 21 period moving average, and we don't want it to turn red and bring us down all the way back to the support of the 2022 trend line. So what we want to see is confirmation to the upside by trading above today's price action of $3.99, right? But it's also important for you to notice that we do have resistance right here. Quick and easy, right? So now, what are the 3 scenarios? Scenario number 1, we break out and we close above there. So that means we stay green and we close above this trend. That's very bullish. Scenario number 2, we peak above and then we turn red and we come down again. That's pretty bearish. And scenario number 3 is that we consolidate and we don't really see much movement as we expected. So now we can see this happen, and then we get to the bottom and it can either break up or break down, right? So that's the 3 scenarios. We have a breakout tomorrow, we have a fail of this trend line, and number 3 is we can get a consolidation, and then we get a direction. So the second part of trading FOMC is trade size. So if you normally start a trade with $1,000 and you go all in, right? When you trade the news, you're pretty much gambling. That's the truth. You're taking a guess. So if you're going to take a guess, do you think that you should go in with $1,000, or do you think you should reduce it to maybe 200 or 300 bucks, right? That would make sense. So that way you can control the volatility you can not be as anxious. You can control your emotions. And you know, listen, I just put a little bit towards this trade. If it goes against me, if it goes with me, it's fine. That's option number one. Option number two is, if you don't have the experience, wait until the news comes out. Wait for the big movements. And when things settle down, then you trade in the direction when it's nice and calm. Right? That's option number two. So when news comes up, make sure that you are reducing the amount of money that you're putting towards your position, right? So that way you don't get stuck in the chop or stuck in the fast price action, and then you sell too soon, and then you're like, man, it went exactly the way that I wanted it to go, and one candle took me out. You don't want to get that FU candle. You want to wait either till the price picks a direction, let it fluctuate, and then that's it, man. Trade safe. Look forward to the educational stuff that I'm going to be putting out. I'm going to be putting out a free course, and it's going to be tutorials. It's going to be all the stuff you need to know to get started with trading. If you have any requests, if you want to know about any tickers or anything you want me to analyze, leave it in the comments, like and subscribe, and thank you for watching. Be safe tomorrow. Be smart. Remember, keep your position small. We don't know what's going to happen, so keep your position small. All right? Trade safe.